Hi everyone. So welcome to the live stream today. Always a pleasure coming your way as we continue with our discussion towards the August 2022 examination. And we are still looking at our IFRS masterclass. And today and Friday, with a live stream already set up, we're going to be looking at some practice questions relating to the various IFRSs that we have covered so far. Now, in case you missed the session on the various IFRSs that we've covered so far in the series, you need to check the description of this video on YouTube, and you'll be able to watch the part one, the part two, the part three, and the part four. In the series, we've been able to cover a couple of standards relating to IAS 2, IAS 8, IAS 10, IAS 16, IAS 23, IAS 37, IAS 36. We've covered all these seven standards in our discussion. And the most important thing is how these standards are netted together, how they are interconnected with each other. And that is how you have to learn the standards. That is how you need to know the standards together in order to increase your chances of understanding them pretty well, but most importantly, to pass the examination. So we want to get into some discussions today, solve a couple of questions relating to how these standards will be put together in a one-liner question, and how you can structure yourself up and deal with the various things that has to be dealt with. And I see some of you guys joining. You are welcome to the live stream. In case you missed the sessions we did explaining the standards, you can check the description of this video on YouTube, and you will be able to get access to watch the entire playback. Remember also that you can download our mobile application, the Nhyira Premium application, on the Google Play Store or the App Store. You will get access to some exclusive contents that are not on the YouTube channel here to enable you to prepare well for the examination and pass the examination. If there are any questions you have, you know what to do. Put it in the comment section for me. I want to hear from you, answer any questions that you have, and assist you to be able to prepare well for the examination. Also, remember to give us a thumbs up on the video. It helps us a lot to reach a lot of students, and the YouTube, the Facebook algorithms will be able to push the video so we can reach a lot of students and assist a lot of students just like you to be able to become successful. And because that is my goal and my objective for these live streams. So let me bring up my screen. Let's get excited about it. Let me know if there are any questions for me. The standards that we've covered so far: IAS 16, IAS 2, IAS 8, IAS 10, IAS 23, IAS 37, IAS 36. Do you have any questions relating to these standards really quick that you would want me to share my thought on? So if there are any questions you have relating to these standards, you can put it in the chat box. Maybe something that you want some clarity on, put it in the comment section. I'm going to be answering all your questions and assist you with the assistance that you need in order for you to really understand these standards to the core, so you can work with them really in the exam. So I see some comments coming in. Let's see if we can take a couple of them. Put in the comment section any questions you have for me about these standards. I want to hear from you guys. Benjamin Labi said, "Good evening, sir. We're waiting for you." Okay, here we go. Israel Sum said, "Good evening. Good evening, Israel. I hope you're doing well." Genesis said, "Thanks so much for your knowledge provided. Always a pleasure." Genesis. Abdullah Allah said, "Good evening. Good evening, Abdullah. Thanks for joining us. Watching you from Liberia." Awesome, Genesis. Thanks for joining us from Liberia. Abdullah also said, "Watching from Nigeria." That is awesome. And thanks for joining us on the live stream today. Donald John said, "Hello, sir." Hi, Donald. Thanks for joining us. Patient Tibacho said, "Good evening, sir. Hope you're good. Watching from South Africa." Yes, I'm flourishing, and I hope that you are also doing well, Patience. And thanks for joining us from South Africa. Remember to share the video, share the channel. We want to reach as many students as possible across the continent to assist people just like you to be able to become successful and understand accounting and make it really personalized in that manner. Albert Afeji said, "Credits available for studies." I don't understand your question. Alberta Feji. So maybe if you can give me some context, I can provide you some a better understanding. Samuel Edwin Nelson said, "Hello, watching from Liberia. Thank you, Samuel, for joining us on the stream today. Good evening. First here from Botswana. All right, thanks very much. So some Nigeria, Liberia, Botswana, South Africa. Awesome combination, and definitely my home base Ghanaian also here. Thanks very much, guys. Really love it. Let's share the video. Let's reach as many students as possible. Share the video. Let's reach as many students as possible. Abdullah, sorry, Nuruddin said, "Good evening, Nhyira. Thanks always. Watching from Lagos, Nigeria. Awesome." Um, Bashin said, "Good evening. First time here from Botswana. Okay, that's awesome." Genesis said, "Facing a little difficulty with financial reporting. What is the exact difficulty you are facing?" Genesis, put it in the comment section for me. What is the exact difficulty you're facing? Put it in the comment section for me. Ask the specific question that you would want me to share my thought on. So, any questions you have relating to the accounting standards, relating to financial reporting, corporate reporting, come on, hit me with it. I want to hear from you. I want to assist you. That is why I am here to assist you. So, Genesis, let me hear what challenge that you have in financial reporting, and let's see if we can provide you with some knowledge here. Thy Will McCaffrey said, "Right on time. Greetings. Greetings, McCaffrey. Thanks for joining us." Um, what do we have here? Cotello said, "I'm watching from somewhere." Good evening, everyone. Good evening. Thanks for joining us. Uh, Malebo said, "Hello from Lesotho." Thanks for joining us from Lesotho. Pauline said, "Hi, say watching from Kenya." Nice one. Thanks for joining us from Kenya. Baby Boy Baby said, "Hello, say hi, Baby Boy Baby." That's a nice name. Then we have Temi Tope Ario said, "Nice hat, Nhyira. Thank you very much." Temi Tope. I don't know if I got the name right though. So thanks, guys for joining us from Kenya, South Africa, Lesotho, Botswana, Liberia, Nigeria, Ghana. Come on, guys. You're good. You're good. I really love it. So give us a thumbs up on the video. But most importantly, I want to hear from you. What questions do you have relating to the accounting standards? Something you would want me to share my thought on, something that you are facing challenge in that you would want to, pick my brains, pick my knowledge from. That's why I'm here. So let me hear from you guys with some questions for me. Constant Mozetas. Hello, say hi, Constance. Clark, I guess I got that right. Watching from Liberia. Thank you very much. Ali said hello from Damango. Okay, I think Damango, that's in Ghana, I guess. Watching from Nigeria. Awesome. David said watching from Celerion. Awesome. And okay, some questions are coming in now. So we're gonna pick some questions and then get excited about it. In Dinela, I don't know if I got that right. Watching from Namibia. Whoa, we got a lot of countries representing this afternoon. Prince Bote said, "Watching you live from Ghana, Kumasi." That is awesome. Thanks for joining us from Kumasi. Albert Afeji said, "I meant, do you give fee credit for your lectures? Example, 390 Ghana cedis for two papers. Can I pay, say, one and the other next month?" No, currently we are not having any credit available, because in the past when we give credits, people end up, because the way our platform is, once you enroll on the portal, you get access to the entire content, and that is the beauty of our online portal, the InsyraPremium.com, or if you download our mobile application, Nhyira Premium, on the Apple Store, or the Google Play Store. Once you are enrolled in the course, you get access to the entire course content, which means that you can actually bench watch the lectures in the shortest possible time and get yourself prepared for the exams. Because of that, in the past, when we've given credits, it has turned up for people not being able to, not making payments, and they have gotten access to the content. They've studied what they have to do, and they go out there and move on with their life. So because of that, human behavior and things, we stop doing or offering any credits available. That is why our prices are just the 390 Ghana cedis, and it gives you access to everything. So unfortunately, because of the past experiences, we've eliminated credits from our uh, um, policy when it comes to running or providing services. So unfortunately, we cannot, and that is the explanation to that once you enroll on our portal, you get access to all the contents, and you can bench watch and finish with the entire syllabus in the shortest possible time. Are you getting it? So, unfortunately, Albert, we don't have that available. Unfortunately, watching from Ghana, baby boy. Okay, thanks for joining us. Follow up question: how about payment in installments? Just the same thing. Just the same thing. Just the same thing. It doesn't work. It doesn't work. Please, sir, when will you have a complete session on cash flow? Yeah, cash flow is one of the final accounts that we are going to be looking out for. So stay tuned. Just subscribe to the channel, click the bell notification icon. Make sure you follow me also on Instagram because the details will be posted there. And so definitely we're going to be having a session on the cash flow statements and the preparation of the final accounts in financial reporting as well. So Ami Lay, we're going to be doing that. I hope I pronounced your name right. What else we got? How do I get to join for your lectures from Nigeria? I mean, in terms of payments and the likes. No issue. All you have to do is to go to our online portal, NhyiraPremium.com, and you can enroll in a course or download our mobile application, Nhyira Premium. You go to the Google Play Store uh, and search for Nhyira Premium, and the same name on the channel here, you'll be able to get access to our online content. Alternatively, you can send us a message on WhatsApp. This is the number 05011499296, and you'll be assisted. If you're outside Ghana, the country code is +233. So you send us a message on WhatsApp. Details will be given to you. No matter where you are at, you can make payments using credit card, um, a Visa or Mastercard to be able to complete your enrollment and study under my mentorship. So you can send us a message on WhatsApp or visit our website, NhyiraPremium.com, and you'll be able to get access. This is the website, NhyiraPremium.com. You can see it on your screen, and you can enroll in the course and study under my mentorship for the examination. A couple of other questions coming up real quick. Let's see if I can take them. Will the mobile app suffice? I don't understand. Meaning, will it be enough? Yeah, we have content on the mobile application. If you're a paid student, yes, then you get access to all the content in the mobile application right there. But we have some free videos as well. I think you have answered me. Okay, my label. Is there a discount if anyone registered for two papers? No discounts. No discounts. What you get studying under my mentorship at 390 Ghana cedis per paper is unparalleled because you get access to join our weekly Zoom sessions for the main class. You'll be able to also join our weekend sessions, Saturday, Sunday, for practice questions. You'll be able to join our executive revision masterclass that is 2 weeks to the examination, and you study directly under my mentorship. Get access to ebooks and question kits. And I'm going to be holding you accountable. Assignments are going to be given. Performance evaluation tests are going to be done. And if you don't do performance evaluation tests and assignments, you are sacked from the class when we are discussing those questions which you did not participate when it was being done. And it's a strict policy. Make sure you read our terms and conditions on our website before you enroll in a course. So the way everything is structured here at 390 cedis per paper, it is the best you can get. So unfortunately, no discounts, Clark, because you're really going to be getting the value for your money if you discipline yourself. Because many people come, they are not able to discipline themselves because, like I said, we give assignment, you don't do it, you are sacked from the class when we are discussing that assignment. We do performance evaluation test, you don't do it, you are sacked from the class when we are discussing that. And some people are not comfortable with that because, some people are just full of themselves. And when you're full of yourself, it affects other aspect of your life. But if you integrate yourself in the system, you're gonna make it. Definitely, you're gonna make it. Other questions coming in. How much did you say is the fee for access to the portal? 390 Ghana cedis. You can visit the website and see it. 390 Ghana cedis. I don't know. That could be around $40 or 44 US dollars ish, something like that. That is to get access to learn under my mentorship, join our main classes. Okay, but if you want a private class, then that is going to be different. And our private classes starts at 3,200 Ghana cedis per paper, and that is having a weekly session for with me for 12 weeks in order for you to prepare for your examination, and that starts at 3,200 Ghana cedis per paper. And so that is a private class. So maybe you have a schedule that you don't fit into the main lecture or the main thing, and you want a private class, or you have a peculiar issue that you want to be dealt with privately, then our private classes starts at 3,200 cedis per paper. So if that is what you're interested in, also that is available. And like I said, you can message at 0501499296, and whatever you have will be dealt with. Okay, let me pick more questions and then we can jump into our questions real quick. What else we got? Baby boy said, please, can you guess the topics that might pop up in this August? Oh, baby boy, I love you so much. I'll say, can you guess? Okay. Now let me tell you this. Let me tell you this. Every topic in the syllabus will be represented in the exam hall. Let me take that again. Every topic in the syllabus will be represented in the exam hall. If you go to financial reporting, accounting standards will be there. Now, there are some key standards you have to be aware of because definitely they are going to be in the exam hall. Financial statement preparation will be there. Now, as to whether it is cash flow or P&L account, that is not your problem, because if you know the standards, you can deal with a single entity. Consolidated financial statement will be there. As to whether it will be P&L or cash flow, that should not be your headache. If you know how to deal with consolidation, no matter what comes, you will be good. Ratio analysis, interpretation of financial statement, it will be there. So if you ask, can we guess what topic will be there? Whatever is in the syllabus is going to be there. Your problem should be, how do I understand the fundamental principles underlining all the topics? And then what are the shades of questions that the examiner can bring under those respective topics? So instead of trying to sit down to guess what the examiner is likely to bring, I will tell you to rather open up yourself, understand the basic principles that underline each of the topics, and that is how you position yourself to pass the examination. So I don't do guesswork. Our examination analysis document is strictly available also to our students, and that is shared with them during our executive revision masterclass to enable them to narrow down and focus on some issues that they have to look out for, and even the perspective of the questions. And that is available to our students during our executive revision masterclass. So that is my answer to you, baby boy, when it comes to that particular aspect. Do not be focused on what topic, because the topics are going to be represented. Your issue should be, how do I understand the principles under each of the topics to be able to pass the examination? All right. I hope that makes sense for you. Donald John said, will you revise IAS 33 with the possibility of solving exam type questions? Definitely, IAS 33 is one of the standards we've received questions on or queries on, so we're going to be looking at it. Mustafa said, hi. Hello, Mustafa. CD said, hello, sir, please, when we have a session on a cash flow? Okay, we're going to be having a session on cash flow. I think this is another time that is coming up in that case. So we're going to see how we're going to have in that. We will have that possibly during next week, because Friday there is another live stream already scheduled. I hope you've seen it on the channel and you've seen it on Facebook as well. So on Friday we'll be having another practice question session. Probably we can do the cash flow on Friday. I don't know. Let me know if that makes sense for you. What do you think, guys? Should we have the cash flow on Friday, session on cash flow on Friday? Let me know if you're excited about it. Put it in the comment section for me and say yes. Or if no, you say no. Whatever you say is what I'm going to do. So give me some feedback. Let me see. Fling Tunes said, all my time in the UPSA and taking these classes, it's been this channel. I've learned everything I know in accounting. Good though, sir. Continue the good work. That's awesome to hear, Fling Tunes. And congratulations, best wishes as you continue with your journey. I remembered seeing 300 for additional paper for the remaining 6 weeks. Is it current? Um, Okay, that means you are already a student, right, G Clark? Because we did that offer to our students in the group. So if you're already a student, yes, that is still available for our remaining students. So maybe you can send a private message and then you'll be giving directives on that. This is Yandam, and I attended UPSA. All my time there and taking notes, accounting papers, it's been this YouTube channel. It's really helped a lot of us, and we even watch it on groups. Kudos, say, okay, that's awesome. Yandam in groups, right? That's awesome. Musi P. James said, hello, this is the 390 applicable to any paper? Sorry, I'm in Uganda and the CPA we do here has different levels. Yes, it applies to every paper, but please make sure that you look at the course's content, that is the syllabus structure in the course compared to your CPA, because not everything will be in there. So maybe what I will let you do, Musisi, is to send us a message on WhatsApp 05011499296 05011499296. If you're outside of Ghana, the country code is +233, and then you can send us a message on WhatsApp. We can look at your syllabus structure and see if it fits in the course available on our portal before you enroll, because we wouldn't want you to enroll in a course that may not have the content that you need. Okay, so James, you can do that. Okay, Donald said Friday. What is the cost of the online class? Ring Echo. It's 390 Ghana cedis per paper ring. Stan Obi said IAS 7. Okay, so two responses so far on cash flow. I don't know. Let's see if I will get other responses. Then probably we can take it. I don't know if we will get other responses. Okay, so let me bring up my screen. Let's get excited about our discussion today. We want to look at a couple of practice questions and see whether we can do something in that regard. So, Teaser said, or Tizer, I don't know if I got that right. Please add IAS 21 on the lecture list. Yes, that is already there. Effects of changes in exchange rate. I think we have it there already on our channel, on our topic list that we'll be covering later on in the discussion. So teaser, continue to stay tuned, and we're going to be covering that on the channel. Okay, so let's see. Sorry to ask, but what is the registration process? Can payments be done through Momo? Yes. Head on to the website nhyirapremium.com, download or through our mobile application. You can also send her a WhatsApp, and details will be sent to you to enroll in the course. And you can make payment using mobile money or any credit, any MasterCard or Visa card as well. So that's possible. Albert Afeji. Okay, Clark said yes, Friday. So, like, we got three consents for the cash flow discussion on Friday. Okay, let's see if we got a lot of consents coming in. Maybe I could take it on Friday. In that case, it's possible because we have a class schedule on Friday, so we just have to change the name, and then we will be good. Okay, any other questions for me relating to these standards? So in the past few weeks, we've gone through IAS 2, that is inventory. Okay. We've gone through IAS 8, accounting policies, changes in accounting estimate and error. We've discussed IAS 10, that is the events after the reporting period. Remember, in case you missed this, you can check the description of this video on YouTube and you can watch all the entire series of these whole standards that we dealt with. We've looked at IAS 16, that is property, plant, and equipment as well. We've discussed issues relating to IAS 23, that is borrowing cost. We've spoken about IAS 37, provisions, contingent liabilities, contingent assets, and we've looked at IAS 36, and that is impairment of assets. So, in the entire series, as we try to learn the standards together, we have looked at it and looking at it in that particular case. And these are the key standards that we have looked at, that we have shared our thoughts on. So we want to start with our questions today, and we want to look at a question that we have here. I don't know if I have my slide here. So this is a question that we have. You can take a screenshot of it, or for those of you who are already students and learning under my mentorship, enroll in financial reporting or corporate reporting. This is in your revised question kit, Candy Limited. So it is in your revised question kit. So those of you who are studying under my mentorship, you have your revised question kit in the financial reporting. If you go under IAS 16, that is from page 55, you're going to see Candy there on page 55. For those of you who are having the financial reporting kit, in the corporate reporting kit, also the same question is there. So for those of you who are already my students, you have this in your question kit available. But if you don't have access, you can take a screenshot of the questions here, and then it will be able to go through it and see what we have to do here. So let's see the requirement. It's very important to know what we have to do or what we are required to do in the discussion to help us to really get what we have to look at. So the requirement here is pretty simple. It says prepare extract from the statement of profit or loss and other comprehensive income for Candy for the year ended 30th September 2014. Now, it is very important that anytime you're dealing with financial reporting questions, you look at the year ended, because that is going to guide you on exactly what you are expected to do in the question that has been provided to you. Okay, in the question that has been provided to you. So our year ended is 30th September 2014. 30th September 2014. And he says from the statement of financial position at the same date with regards to property, plant, and equipment. So let's see how we can actually structure Candy out. Most importantly, presentation is very critical. If you're a follower of my work, I always tell you that the way you present your work is going to take a key, or have a key influence on your ability to actually pass the examination. So presentation is going to be very crucial. So make sure you pay attention to the orderliness of the presentation and the structure that we go through, so that you can really increase your chances of understanding this very well. Now, note that whether you are doing financial reporting or corporate reporting, IAS 16 is one of the fundamental standards. Something about it will be there every time. Something about it. If you are doing financial reporting, your single entity financial statement, PPE, is going to be there always. It is one of the fundamental go-to standards you cannot skip, you cannot go away from. If you are doing corporate reporting under consolidated financial statements, definitely there will be something about IAS 16 that you have to be mindful on. So it's a basic standard that cut across, and it's crucial as we go into the examination. So let's look at this question we have here. The extras from the trial balance of Candy as at 30th September 2014 are below. So we see the cost of the asset, we see land and building, and the total cost is 55,000, with the land elements being 5 million. Then we are told also that there is plant and equipment, and that is 58,500. Then we see accumulated depreciation also coming in. Now, remember, like I say always, you don't read the entire question before you start. Once you read your requirements and know what you are expected to do, all you do then is, as you read a question, you work. As you read a question, you work. So you don't have to read the entire questions. I keep on saying this to you every time. As you read a question, you work. If you say you want to read the entire questions, by the time you finish reading the entire question, your brain is, stuffed with a lot of things. You wouldn't know where to start. So I'm not going to go to the notes yet. I want to set up my workings for the asset schedule for this entity, Candy Limited. So we have land, we have building, then we have plant and equipment. Then we can have total in the final column. I think we're working 3 zeros up. Yep. So we pull it up. So I'm already starting to get some free marks coming in for me. And that is what I'm after all the time. Where can I get a free marks as early as possible, even before I dig into the question and begin to mess myself up? So I want to have some free marks. So we bring in the cost of the assets. So initial cost of the land is 5,000 and the building is 50,000. Okay, because the total is 55,000. Then the plant and equipment is 58,500. Okay, so we add it up to get a total on the total column. So we can add it up in that case. Then we go. Then we see accumulated depreciation. Now be careful here. This is accumulated depreciation on 1st October 2013. 1st October 2013. 1st October 2013. It means that is the beginning of the year. Okay, that is the beginning of the year. So because if the year ends on 30th September 2014, it means it started on 1st October 2013. So at the beginning of the year, this is the accumulated depreciation: 20,000 for building, 34,500 for plants and equipment. So we less accumulated depreciation. Land is not depreciated, you should know that by now. So 20,000 here, and then 34,500. And that's going to be, let's put that up well. And that's going to be 54,500. I'm going to need the total columns as well for my workings. So let's pick a new ink. So this will be the carrying amount at the beginning of the year, which is the 1st October 2013. So at the beginning of the year, this is the carrying amount of our assets. And so the land is going to be 5,000, building is going to be 30,000, and this is going to be, let's see, 24,000. Please confirm my figures for me, then we could do the total columns as well coming in. So again, you realize that I've not started reading the notes yet, but I get some free marks coming in. Set up myself up. So you work it out as you go. You work it out as you go, and that is very crucial in that particular case. Seeing some questions coming on, Isaac Naughty said, please, will the classes be held in evenings only? Which classes are you talking about? Please provide me some guidelines there. Kebby Job said, yes, cash flow on Friday. Okay, yes, we can do it on Friday. Okay, so it means we're getting a lot of responses for the cash flow masterclass on Friday. Possibly we have to then pull it over. The Augustine said, thanks, bro. Your videos are so helpful. I've been watching them all for moments, and I have a very impressive GPA in my accounting program in the USA here. God bless. You are a good person. Thank you very much, and congratulations on your uh, good GPA. Hoping that you push in more as you move ahead. Isaac said, please, the page number. It should be the same around 55. So check it out and see, because in the corporate reporting, I think it should be around almost the same page. So you can check it up and see 55, 56, or something like that. Speak Out said, but sometimes when we work, and read at the same time, we miss some additional information which later affect our final work. Sometimes it makes our work dirty. Um, it's a choice. It's a choice. So whatever that is comfortable for you, you go for it. Are you getting it? Whatever that is comfortable for you, you go for it. Please, I'm in this YouTube classes. Yes, it's usually 4:30 p.m. during the weekdays. In that case, usually 4:30 p.m. So let's move on with the reading. Now we go to the notes, and then we can see the additional information provided to us, and then we can work with that. So let's see what we have here. So the price of property has increased significantly in recent years, and on October on I think I have my slide here. And on October 2013, the directors decided to revalue the land and building. So be careful here. When is the revaluation occurring? At the beginning of the year. Okay, the revaluation is occurring at the beginning of the year because that is 1st October 2013. That is 1st October 2013. So the revaluation is occurring at the beginning of the year. The directors accepted the report of an independent surveyor who valued the land at 8 million and the building at 39 million on that date. Again, I'm not going to jump to read anything. I'm just going to put in my figures here. So we're going to close it up like this and bring in the revalued amount on the same date. So revalued amount, 1st October 2013. And the land is now revalued at 8 million. The building is 39 million. So 8 million, 39 million in that case. Now, so if you look at it, we are going to be having the balancing figure to be revaluation surplus or revaluation gain as a balancing figure. And that revaluation surplus, sorry, 38. Is it 38 or 39? Okay, 39 for the building. And so what is going to happen is that the revaluation surplus will go to OCI, that is other comprehensive income later on. We'll deal with that, don't worry. So there's a revaluation surplus of 3,000 here, revaluation surplus of 9,000 here. Then we proceed to read. So let's continue. The remaining life of the building at 1st October was 15 years. Listen carefully. If you remember the principles we mentioned that when asset is revalued, depreciation is going to be charged on the revalued amount. And the examiner said the remaining life, as at 1st October 2013, the date on which they did the revaluation, is an amount of 15 years. Now, get the next statement. Candy does not make annual transfer to retain profit to reflect the realization on the revaluation gain. Because you see, when we revalue assets, the depreciation charge is going to be higher than what we should have charged. So sometimes, in order to compensate shareholders for the excess depreciation, there has to be transfer from the retained earnings, from the revaluation surplus to the retained earnings. In this question, the examiner is saying that we don't do it. We don't do it. So let's go. Let's see what we got here. So we see a revaluation surplus in total 12,000 here. It means that the plant and equipment were not revalued, so we're still going to have our 24,000 coming up, and we will add it up to get our totals coming in that particular case. This should be maybe 59,000. So that we add it up, and that is going to become 60 and 71,000. Can confirm me on the total perspective there. So again, you see so far. Then remember they said the building had a remaining useful life of 15 years. So what do? We calculate the depreciation for the year. Now, remember the revaluation was done at the beginning of the year. So we're going to calculate a full year depreciation on the building, and that is 39,000 over 15 years. Land is not depreciated. So let's get 39 over 15. Let's see. So 39,000 divided by 15, that's giving me 2,600. You can confirm that so that we get a carrying amount at the end of the year. So carrying amount end of the year, that's on 30th September 2014. This is still 8,000. Now 2,600 minus 39,000 will be 36,400. Okay. Again, we work as we move. We work as we read. We work as we read. Any questions so far, please? Any questions so far? Remember, presentation is key. Presentation is going to be key here. It's going to be key. So we move ahead. Let's continue to read. Plant and equipment is depreciated at 12.5% per annum using the reducing balance basis. So whilst building is depreciated on straight line, the plant and equipment is depreciated on what? The reducing balance basis. So that is going to be 12.5%. That's why I left some space here. So 12.5% off the 24,000. Now I could actually do it there as well because it's on reducing balance. So 0.125 times 24,000. That's going to be 3,000 for this one. So we take it out, and that's going to be 21,000. So that we have a total depreciation for the year to be 5,600. You less that from the 71,000, and that's 65,400. Any questions, please? Any questions? Now let's go back. Let's see if we finish reading it. No depreciation has been charged on any non-current asset for the year ended 30th September 2014. Depreciation is charged to cost of sales. Good news. So this is our presentation. And remember, all we've done so far is just workings. Okay, all we've done so far is the workings. I see some questions coming in. Let's see if I can take it out. Obi said the revalued amount, does it include the independent valuer's fee? No, usually that is treated as an expenses in the profit or loss account. So usually that is treated as an expenses in the profit or loss account usually. So this is our workings. Let's now extract the financial statements. So statement of profit or loss. So statement of profit or loss. And other comprehensive income. I'm gonna shift this guy a little bit down. Maybe you cannot do that. So Candy, statement of profit or loss and other comprehensive income. For the year ended 30th September 2014. Remember, it's an extract we are doing here. It's an extract we are working with here. So we're slashing our currency sign. Remember, we are told depreciation should be taken to cost of sales. So we don't have the profit or loss coming in. Then under the profit or loss, we will have cost of sales. Then under that, we're going to be bringing the depreciation. From the workings, we got a total depreciation of 5,600. So we bring it up here. 5,600. That's an expense, so it's going to be negated. That is all. We go to other comprehensive income. In the other comprehensive income, we're going to bring in the revaluation surplus or the revaluation gain. Also from our workings, which was $12,000. $12,000. So that is our statement of profit or loss and OCI. Very sweet, simple, straight to the point. Now I'm gonna do something about that in a moment. So just stay with me as we move ahead with the discussion. So let's look at a statement of financial position. So statement of financial position as at 30th September 2014. Remember again, this is an extract, okay? Everything we are doing is an extract. So what do we do? What do we do? So we go in and bring in our non-current assets. And we're going to have property, plant, and equipment. Make sure you don't go and write PP, you lazy people. Property, plant, and equipment. Make sure you put that in full. And that's where we're going to bring our carrying amount from our working slide. As at September 2014, that will be 65,400. $65,400. All right. So that is what we have there. Then we go to the equity part and we can bring in the revaluation reserves or the revaluation surplus. And that is also an amount of 12,000 if you remember. Any questions, please? That is the answer to this particular question. That is the answer to this particular question. Very clean. Look at the working slide. Very, very clean. Very, very clean. You don't want to, if you are from where I come from, you don't have good handwriting. You have to ensure that when you're doing financial reporting, corporate reporting, and you're doing anything at all, your presentation has to be a little bit orderly so that it looks clean and it's acceptable when it is opened by somebody in that particular case. When it is opened by somebody in that case. Any questions, please? I see some questions coming up here. Say the carrying amount determined, is it as at 30th September 2014 or 1st October 2013? I don't know which carrying amount you're talking about, Clark. We have two carrying amounts here. There is carrying amount at the beginning of the year, which is 1st October 2013. And then there is also a carrying amount at the end of the year. Our requirement is to determine the carrying amount at the end of the year, which is 30th September 2014. And so that is what we are looking at. But then because revaluation occurred at the beginning of the year, that's why we are also having a revaluation surplus situation coming in there. Any other questions? Clark said, kindly show the workings. Yep, that is what is on the screen. Everybody good? Now, you see, in this question, there are two things that the examiner could have done with us. Two things. There is a deferred tax that the examiner could have brought in the picture. Okay, because anytime there is revaluation, there is deferred tax. If you remember when we're discussing the standards, I told you that anytime there is revaluation like that, there's going to be deferred tax on subsequent measurements. So IAS 12 could come into town. We'll look at a question like that pretty later. Then the next thing is annual transfer. In this question exclusively, we are told that the entity does not make transfer. Let me clean my working canvas here and just let you see what I'm talking about. This is what I'm talking about. Okay, this is what I'm talking about. What you see here in the, I don't know, in the wine color or whatever that color is, Candy does not make annual transfer to retain earnings or retain profits to reflect the realization on the revaluation gain. Now, assuming they make transfer, then the calculation would have been different. So let me present to you how the workings would have been, assuming they were making a transfer. Okay, so assuming they were making a transfer, remember our revaluation surplus relates to the building, because building is a depreciable asset. So even though the entire revaluation surplus is 12,000, our transfer will not be on the 12,000, because the transfer is because we are compensating shareholders for their depreciation. Because if I tell you this, if we look at the carrying amount, okay, this is the carrying amount of the building. The carrying amount of the building from our working slide is 30,000. Okay, so based on that, if we were calculating depreciation would have been 30,000 over 15 years, because remember our remaining useful life is 15 years, and that's going to be 2,000. Are you getting it? So then the carrying amount should be 28,000. But then if we now use the revalued amount, because depreciation must be done on the revalued amount, the revalued amount is 39,000. And if you remember, we calculated depreciation on that 39,000 over 15, and we got 2,600, if you remember. So you realize that when we calculate depreciation using the revalued amount, there is an excess depreciation arising from that. So the excess depreciation will be the depreciation at the revalued amount, 26, and the depreciation would have charged using the carrying amount, and that will be an amount of 600. What does that mean? It means that profit for the year has been reduced because depreciation is an expenses. So expenses has been increased by 600. Now, when expenses increase by 600, it means profit for the year has reduced by 600. It means our retained earnings, which is where dividends is paid from for shareholders, has also reduced by 600. So, in order to compensate the shareholders for this loss, because this is not really an expenses for the company, so they shouldn't be paying for it, they shouldn't be punished for it, they should still get their dividend for the year. So, in order to compensate the shareholders, what we will do is that we are going to be transferring the 600 from the revaluation surplus account. So we'll debit revaluation surplus with the 600, and then we'll credit the retained earnings with 600. So that right now, on the face of the statement of financial position, we were going to be having revaluation surplus, and at the equity side, okay, this is just an extract to show you. what's going on. We'll have the whole revaluation surplus of 12,000. If you remember, the whole revaluation was 12,000, surplus was 12,000. Then we are subtracting an amount of 600 from it, so that we're left with 11,400, and that 600 will be going to our retained earnings in that particular case. Remember, this is just an extract, so you're not balancing anything, you're just trying to bring what is happening. So that is how the annual transfer would have been dealt with, assuming the question was silent, or assuming we are told the entity makes the transfer. Usually, when the question is quiet, the transfer has to be made, uh, and you are going to be correct. And then, if the question says don't make it, like in this particular case, they don't make it, then we are good to go. But sometimes the examiner will be silent and you can make the transfer, or sometimes the examiner will correctly state or state it directly that the entity makes the transfer. Then, if they do, this is how you arrive at the transfer. Alternatively, instead of calculating the depreciation for the carrying amount, the depreciation for the revalued amount, all you could do is pick the revaluation surplus for the building, which is 9,000, and that will give you the transfer that you are supposed to get. So the annual transfer would have just been 9,000 divided by 15, and that should give you 600. That's 600. So instead of, you don't have time in the exam, so instead of going through this headache, oh, what is the depreciation under the carrying amount? Okay, what is the difference? Just do this. Just do this, and boom, you're gone. You've saved some time there, and you can use that time on something else. So that is how we deal with subsequent measurement of assets, especially when revaluation is done, and when we are supposed to make a transfer, and when we are not supposed to make a transfer. Any questions for me? Any questions for me? Any questions? Any questions? Any questions? Any questions? Any questions for me? So that is the idea about this particular question, Candy. All right. Very, very direct question. Seems that it doesn't have a lot of things in it, and definitely it doesn't. Now, the sweet thing is that if you're doing financial reporting, this could be a footnote to the financial statements. Okay, this is one footnote to the entire financial statement in that particular case, and that is what you need to be aware of. That is what you need to be aware of. Or in the cash flow statement, this is could be one of the footnotes that you are dealing with. And that is going to be the issue there. I'm seeing some charts coming in. Let's see if we can look at them real quick. He said, can you kindly go over the transfer explanation? We are saying that the annual transfer is occurring because we are charging more depreciation when we revalue the assets upward than we have charged. For that reason, shareholders must be compensated for the excess depreciation. So, how do we get the excess depreciation? It is the difference between the depreciation we would have charged if we hadn't revalued the assets and the depreciation that we charge when we revalue the asset. And we saw the difference to be $600. And we are saying that the transfer will be that we debit the revaluation surplus account, because the revaluation surplus account is going to be credited with the 12,000. Now we will debit it. So you subtract the 600 from it. Then you now go and add it to your retained earnings. And that is going to be the issue about crediting the retained earnings. Usually, this workings is going to happen in the statement of changes in equity by subtracting the 600 from the revaluation surplus and adding it to the retained earnings. So that is the issue relating to this particular one. And so we subtract the 600. And I'm saying that there's an alternative way. Rather than going to calculate the depreciation we would have charged on the carrying amount, and you just take building, because it is the building. The transfer is done in respect of depreciable assets. The transfer is done in respect of depreciable assets. Hence, you could take the 9,000, which is a revaluation surplus in relation to the building, then you divide that by 15 years, the remaining economic useful life of the asset. And that gives you the 600, same way as the annual transfer, if we were supposed to do that. So that is the issue about that. Let me know if you are okay with that, Clark. What if there is a deferred tax? Okay, Stan Obi, if there is a deferred tax, the information will be different. So we'll look at another question about this later on, possibly on Friday. We'll look at another question where there is a deferred tax when the asset has been revalued, and then you will see how the treatment is done. Okay, so when we are continuing with a discussion on Friday, solving questions, we will going to do that. Indinelio said, and about deferred tax, if we can assume also. No. Deferred tax, like the information will be given to you, because for us to determine deferred tax, we should be given the tax base of the asset. Okay, the tax base of the asset, so that we can determine if it is a deductible temporary difference or taxable temporary difference, so that we can know whether it will be deferred tax assets or deferred tax liability. And then the tax rate will also be given to us. Okay, so there is a question that we're going to be solving in that case as we try to solve questions on these standards. And when we look at that question, you will see how deferred tax also is going to be dealt with. Shilana Ode Bebre. Wow, thank you very much. Always a pleasure. Senam Bright said, "Can we go over the transfer?" I think I just did that. I don't know. Let me know if you are okay in that particular case, because I just went over that again. Let me know. What happens if it is revaluation deficit? If it is revaluation surplus, and this is, sorry, revaluation loss, and this is the first time we are revaluing the asset, it will be recognized in the P&L account. Okay, because as we said, if it is the first time you are revaluing the asset and it is a surplus, it is a loss, sorry, it will be recognized in the P&L account. However, where you are having a revaluation deficit or revaluation loss, but the asset previously had revaluation surplus, then the revaluation loss will be written off against the surplus in the OCI, and the excess amount is what will go to the P&L account. So that is what we would have done, Joseph Babs, if it is a revaluation deficit. And so that would depend on whether it is a first time or it's a subsequent time coming in that regard. Any other questions, please? Everybody good? Senam, let me know if you are okay. So we have Simon Seidu, upon Yame Ye, Fahad Nuhu, Haj Bentia, Kobi, Amin Sapon, Nicholas Swalini, and some other people with a thumbs up on Facebook. Thank you very much. And we see some thumbs up also coming in on YouTube. Thank you very, very much. Okay, Joseph said, okay, all right. Okay, that's fine. So that is the idea about how questions can be said. Now, if you're doing financial reporting, this can be a dedicated question for 5 marks. If you're doing corporate reporting, this can be a dedicated question for 5 marks. But it can also be a footnote to the single entity financial statement question. Whether you are doing statement of profit or loss, statement of changes in equity, statement of financial position, or you are doing the cash flow statement, or you're doing the cash flow statement. So that is the idea about that. And you have to be careful on reading the questions, understanding the requirements, but most importantly, knowing how to present in the financial statement, knowing how to present in the financial statement. If you look at the orderliness of the presentation, that is very crucial. That is very, very crucial because it makes your work more presentable. And, that's it. How the 12% was applied in the solution. Which 12%? I don't think there was a 12%. There was a 12.5%. That's what we use to calculate the depreciation on the plant and equipment here. That's what you see here. It was 12.5%, reducing balance method. And so that's how we deal with that. Clark, let me know if that makes sense for you. Zondo said, at least your first name, if I try to pronounce it, I'll mention something. Forgive me, okay? Zondo Intando. I think I love your name, Zondo Intando. The first one, I won't try to mention it. I think it's a South African name, and I can butcher your name. So please forgive me. Intando Zondo. Let me stay with that. Revaluation loss is in the other comprehensive income or P&L. Okay, so Zondo Intando. Let me explain what I was saying here. Let me explain what I was trying to say. This is what I'm saying. I'm saying that if it is the first time, so let's say we have an asset, we bought an asset, and then the carrying amount of the asset is, say, $10,000, and then we do a revaluation. So the revalued amount is now going to be $8,000. And this is the first time we are revaluing the asset. What's going to be happening is that there's a revaluation loss of $2,000. This revaluation loss of $2,000, because it is the first time we are revaluing the asset, it will be recognized in the profit or loss account. Okay, so we recognize it in the profit or loss account as part of operating expenses, revaluation loss. Sounds good? But you see, if let's pick it. So that is the first scenario. It's the first time we are revaluing the asset. But there is another scenario where, scenario number two, let's say that the carrying amount of the asset was $12,000. Then we revalued it to, say, $16,000. Okay, so that's the first year. And so we had a revaluation surplus of $4,000. That's the first scenario in the first year. Okay, so in the second year, we did a revaluation again. And now in the second year, I'm just using some figures so I explain the concept. Okay, so don't think about depreciation or whatever. In the second year, our carrying amount is now, let's say, 13,000, and then our revalued amount now is, let's say, 10,000. Are you following me carefully? So here in the second year, you're having a revaluation loss of $3,000. Now, this revaluation loss of $3,000, you don't take it to the P&L account directly as you did in the first scenario. Why? Because the asset that has now suffered a reduction has a surplus of 4,000 in the previous year. So what's going to be happening is that since the revaluation loss here is 3,000, that is below the revaluation surplus we are having. So you're going to debit revaluation surplus and debit the OCI with a 3,000 in that particular case, and then you credit your PPE with a 3,000. That is what I'm trying to say here. That's what I'm trying to say here. So it is not always that your revaluation loss will go to the P&L account. If the asset has previously been revalued and there is a revaluation surplus relating to the asset, then you don't bring the revaluation loss directly to P&L. It should be written off first against the revaluation surplus. If there is any excess, that is when it will go to the P&L. So it depends on where you are at. Is this the first time? Then P&L. But if it is not the first time and there is a gain about it, then you have to write it off in the revaluation surplus and OCI. So Zondo and Tando, let me know if that was helpful for you to answer your concern or your question relating to the treatment of revaluation loss. Okay, so that is the issue about that, and that is there. Are you getting it? So, like I said, there is another question where there will be deferred tax thrown in the question, and we're going to be looking at that possibly on Friday. You can see the stream is already set up. If you're on YouTube, you've seen the stream set up. If you're on Facebook, the stream has been set up already on Friday at 4:30 p.m. And we're going to be continuing with some practice questions again to see the various aspects and how the standards are intertwined. How the standards are intertwined, and that is what you have to understand. That's how you have to understand. Now, the reason why I'm looking at the IAS 16, because like I told you in the beginning, IAS 16 is like the OG. It is like the fundamental standards on which the other standards are built. Do you understand it? So as you are looking at IAS 16, there may be IAS 12, there may be IAS 37, there may be IAS 23, there may be IAS 20, there may be IAS 37, there may be IAS 36. All these standards have branches relating to IAS 16. So don't just say, yeah, right now I've understood IAS 16. No, 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 no. You have not understood it yet until you get the connective nerves in all the other standards. You don't go there. So take it easy. We're going to try as much as possible, try a couple of questions on Friday as well to see how far we can go in relation to these things. So you see all the connective uh, lines or dots that relates to the standards and the entire ecosystem. And that is how you learn the standards. That's how you position yourself to actually pass the examination. So Intando Zondo said, yes, sir, it was so clear. Thanks so much. Always a pleasure. Thanks that you got that very well for you. Okay, so that's it about that. And because of time constraint, our management accounting class is starting in just 15 minutes. Can you imagine that? Can you imagine the management accounting students like, yo, Nhyira, when are you coming? I'm coming very soon. So I'm going to conclude around here today. And God willing, Friday, we will continue with some practice questions relating to the standards so that we can see how far we can go in that regard. And possibly, if we have time available, then we can start with a cash flow. If not, then definitely from next week, we will have a standard masterclass on the cash flow, maybe on Monday. If that is possible, then we can really continue with this entire discussion. Remember that you can download our mobile application and get access to content and also enroll in our full courses. If there are any questions that you have, you can send us your message on WhatsApp, and this is the number 0501149296. If you're outside of Ghana, the country code is +233, and you can add that as well, and you'll be able to um, join us or get your questions answered for you. So that's it about that. Thank you very much, you guys, for joining us across the continent. And I'll catch you same time on Friday, 4:30 p.m. Like I said, the live stream is already set up, so you can click on it to get notified in case you forget about it. And then join me on Friday. Whatever questions you have on the standards, come on the live stream with it. Let me assist you, hold your hand, provide you with the blueprints, and let's see how you can do in your examination and in your life in general as well. So that's it. Enjoy the rest of your week, and I'll catch you on Friday at 4:30 p.m. as we continue with our discussion. Stay safe and take care. Bye bye.